What's good, everybody? Happy Monday. Welcome to the Doe Show. Just a really quick, short show where we try to help you with your finances, anything personal finance, investing related, retirement investing, personal finance. I said that already. So we'll just cover those topics here on the Doe Show. A lot of times it has to do with retirement investing because we're financial advisors. We specialize in managing retirement accounts. We're fiduciaries. We're SEC registered. We manage our own portfolios, so we don't charge any expense ratios on any of the funds that you happen to see on our website. And we do manage all of our own personal funds here. So today we're going to do something unique. We're going to talk about trading, right? Something near and dear to my heart. But we're going to talk about trading in your retirement accounts. So lately it's become more flexible, right? Where people can trade different products that they used to not be able to trade in their retirement accounts. So if you know how to ask, you could actually have options in your retirement accounts, actually very popular. Futures can be traded in your retirement accounts, along with everything else that you're used to hearing about, mutual funds, exchange traded funds, stocks, and etc. So there's a lot of opportunity there. And personally, I do know some people that actively trade in their retirement accounts, but they are highly skilled. So these are not your everyday sort of watch TV and place a trade people. These guys know what they're doing. Two of them are guys. They know what they're doing. So I want to go over a few things today. I'll take your opinion. What do you think? Should you actively trade in your retirement accounts, or should you sort of set it and forget it with the occasional rebalance and, of course, trying to improve where you can? Here's a couple stats. I'll give you this real quick. We have, and I want to just draw out a quick example here. 18% of our customers check their accounts every day. Their performance, meaning they log in, they take a look, 18%. Yes, we keep track of that. 44% of them check their accounts every month. So every day we've got 18%. 44% check them every month. Meaning they're not trading it. They're checking in to see how we're doing, the things that we are adjusting. 80% of them check twice a month. Do you think that's too much? Are any of these people wrong? Right? If you're not one of our customers, no problem. But if you are and you fall into one of these categories, are you wrong? Should you be looking so often? 18% look every day. I bet you I could name at least 6 people that check every day, our customers. 44% check every month. It seems like more of the sweet spot for those people. And then 80% check twice a month. But is that a problem? So I maintain that the engaged customers are the best customers. And I will even step aside for a second, put the advisor hat off for a second. I maintain that the people that check their accounts more often are better investors. They're better in the long run. I would venture to say that their performance, their dedication, their contributions are actually better than those that don't check, the people that fall outside of this category here. Now, big difference between being engaged in how your investments are doing, your 401k, maybe your Roth IRA with us, wherever you're invested, and then a big difference between that and actually doing changes, making adjustments. So those are the stats that I have for the customers that check their accounts. Now, we went through and we took a look. How many people ask us to make custom changes, right? They look, I can't talk. One day. They look at their account and they say, you know what, I think I'd like to own this particular stock. I'd like to own 5% of this stock, 5% of this stock, or whatever that's outside of the current portfolios that we offer. 8% of our customers make custom adjustments. I try to shy away from that because I can't, sort of show you what's going to happen. I have no history for you. I can't really prove if that's a good thing for you. But some people are very partial to a company they work for. It could be Verizon. I use that example because that's always the first customer that comes to mind. They worked for Verizon their whole life, so they're a little partial to it. They feel like they have the inside scoop on when things are good and bad, and so they have asked us to make that adjustment. So 8%. 13% ask for frequent changes, meaning more than one a quarter. 13% say, you were in this fund, now I'd like to switch to this fund. I was being aggressive, now I'd like to be conservative. The markets scare me. I was being conservative, now I'd like to be aggressive. The markets excite me, right? And so 13% of people ask to make frequent changes, meaning it's not one adjustment, it is many adjustments over, at least one per quarter. And now that doesn't count the people that say, I would like to start aggressive, and then they go, maybe we could be more aggressive. Can we speed it up a little bit? That doesn't count. These are the people that say, I want to do this. No, I want to do this. No, I want to do this. No, I want to do this. And sort of jump around. So 13% of the people do that. I think that's, if you were to do like a national average, I would bet that would be pretty much the same. Now, again, I will maintain that the engaged customer is a better customer. The engaged investor is a better investor. However, the question remains, should you trade actively in your retirement accounts? And I say absolutely not. Most of you should not be trading in your retirement accounts. You make adjustments, rebalance, of course, add and improve on your positions. I would suggest, making sure the speed is moving appropriately for what your goal is. Of course, all of that aside, I'm talking about buying a stock like, what was the one? Tilray. Buying a little Tilray, selling it when it goes up there, buying some AMD because that took off and that was in the news, buying Kronos because that was a hot stock for a while. I'm not talking about the people that just want to rebalance. I'm talking to those people. When you buy and sell stocks on a frequent basis, number one, you better be getting it for free if it's in a retirement account, because last I checked, everywhere is like $3, $4, $5 per trade, and those are good deals, by the way, to pay that. So it better be for free, right? And then the second thing there is, at what cost does that come? You've got to match your performance to something. And I'm not a big fan of saying, oh, everything has to be balanced out to the S&P, but you have to match. If you're going to be trading actively, you better know that the last quarter you did well compared to what you did the quarter before. And you better have some kind of performance. And I find that almost nobody that actively trades their retirement accounts keeps any sort of track of performance. They just like to buy and sell. So you have retirement here. Oh, I almost spelled it wrong. You have retirement here, and then you have a personal wealth account. We've done this one before. If you want to actively trade, go over here. Start your own personal wealth account. This will keep you engaged in what's going on over here, but help you get to buy and sell the things that you like. I have nothing wrong with people that want to open an account and play the pot stocks. If that's what you like, so be it. Go play those pot stocks. But if that's what you do, just do it over here with money you can afford to sort of wiggle around a little bit. I hate to see people come over here and do this with their retirement, and then time passes. Remember, time is king, not cash, when it comes to retirement investing. So I hate to see people wasting time sort of chopping around, holding positions that become losers. You know the game. So over here for sure. Here's the thing. Somehow, now I've taught thousands, literally thousands of people around the world how to trade and how to invest. And for some reason, people go, yep, I'm going to be a trader. And they just dive in. They're like, I got this. I'm going to buy some stuff. I'm going to sell some stuff. It's going to be great. And they don't think like, wow, this is a profession. The active trader, the Wall Street trader, that's a profession that someone spent years and years to fine tune. They just think they're going to dive in and do the same. It'd be like me jumping in an airplane and going, I got this. Let's roll. Which actually, a little short story. That's like my daydream. You know how some people go to a concert and like if you're a drummer or a singer, you go see your favorite band and you like secretly hope that the drummer is sick, so they ask for someone in the audience to come play the drums, and you're like, I got this, I know every song. Mine is that I'm on an airplane and they open the door and they're like, both pilots can't land the plane. We need someone that can try to land this plane. I would be like this the whole time, just like, let me try it. That's my daydream. When I'm on an airplane, I hope it's me. They have to like call to action, Dustin. I'll come flying up there, jazz shirt and everything, sitting in a seat. I would love to try to land a plane. Different story. So nobody just goes, oh, I'm going to fly a plane, and hops in a plane and starts flying. There's prep, there's education, there's knowledge, there's screwing things up, there's landing where you bounce off the ground and then come crashing back down again. I did that. So there's a process. When it comes to investing, go over here. If you want to actively trade, there are so many platforms where you can buy and sell and screw everything up while you learn. You will mess things up. And go do it over here with this one. Meanwhile, your retirement's just chugging along, right? It's where it needs to be. It's invested for you, for your goal, not because crypto's exciting again, or pot stocks or whatever. It's invested for you. This is where you go play. And I got bad news for you guys. Those of you that have been doing this for a while and you think you're great traders and everything, I see the emails, I hear it. How's it going now? When the markets go straight up, everybody wins, right? They say a rising tide lifts all ships, meaning all of us are going along looking like heroes, making a bunch of money, and then all of a sudden the markets get shaky, and those that are really sort of novice and just getting started, they really start to stand out. Those are the ones that make stocks really fall, because they'll let a stock go until they can't bear the loss, and then they'll pile out of those shares, which causes a really, really aggressive decline in stock. So I'm just saying, everyone can learn how to trade. I wholeheartedly believe that. I have taught people that should not probably be trading, and I watched them grow, and over the years they've gotten a lot better. So everyone can do it if they want to. I'm just saying, do it over here. If you're one of our customers, we're going to do a lot more of these, but we do classes where I'll go over all these stocks with you. If you have positions you're in and you want to know what's going on, where should you get out, where should you put your stop loss, things like that, maybe teach something new, I'll totally go over it with you. While we take the emotion out of this, we'll go ahead and push your retirement along so that you don't have to stress about it while you go have fun over here. Okay, so if that's you, then no problem. Is there any way to avoid cold calling working in finance? I just took an advisor job, not great at sales, I'm not very outgoing. Well, you picked the wrong job, Rob. If you're not very outgoing, it's going to be tough. Now, I personally, Rob, am not a guy that's going to go to like a fundraising event and like put the suit and tie on and go try to network with people. I don't like that. I would rather like just add as much value to somebody as possible, have them remember me, and then come join us. That's the long game, Rob. That takes a long time. I'll be honest with you there. But is there any way to go about it without cold calling? You're eventually going to have to come up with some kind of marketing to get yourself out there. And the old school way of doing dinner, have a dinner and then teach everybody something, I think that's kind of on its way out. But you'll find it, man. Stick with it. Send me an email. Let's chat. Any tax implications? Yeah, let's see how outgoing you are. Will you email me? Will we talk on the phone? How nervous will you be? Are there any tax implications when trading within your account? Can you talk about the liquidity of your portfolio or the funds? What is the problem upon retirement? Larry, okay, tax implications on trading within your account. Over here, could be. Over here, usually not a big deal, right? You're either paying your taxes in retirement or you don't pay them at all because it's a Roth IRA or something. So personal wealth account, absolutely. We've done a few videos on long-term and short-term capital gains that changed this year, by the way. Maybe we'll do it again so we can update you on that one. Liquidity of your portfolio funds. The funds on our website, we use only the most liquid stocks, exchange traded funds, or a combination of both. We actually describe right on the website how we will sort through a list of stocks to buy, how we will qualify them, and how we will add them to the portfolio. Liquidity is the absolute number one thing that I care about. I do not care about whether the stock is popular or whether it's in a certain sector, unless that's the goal of the fund. Liquidity is very, very important to us. And thanks to using guys like Virtu and Citadel, liquidity is all but not an issue with us, actually. But we don't do random like penny stocks or anything. And so therefore it wouldn't be a problem. Customers that check are not better. You saw the research on that, more likely to make emotional decisions, but your customers could be a biased example. Could be, yeah, all I have really to go on is our customers. When a customer tries to make a emotional decision, first of all, I try to prepare everybody ahead of time. So whether it's spending stupid amounts of money on a towel or doing classes that give the statistics of when a market falls, how long should we expect, what about the recovery, what happens if you buy at the highs, we do all kinds of classes. I like to try to get people ready ahead of time. But if a customer tries to make an emotional decision, that's where I want to reach out and go, well, let's talk about this, right? Because statistically, here's where we're at. Emotionally, if you make this decision, here's where you could be. And so I'm not opposed to them making the decision, but I want to make sure they know what they're getting into. I get a lot of emails from customers about Social Security, very emotional about Social Security. And that's unfortunate. So I have the stats, I've got everything that I want to put forward. They're going by articles they may have wrote on websites that are trying to push certain things. You know the drill. So I'll try to help with that. Yeah. Oh, also we do have a lot of customers that are active traders. Yeah, and I would say very good active traders. Not as a bulk though. I would say maybe 5% of our customers are in that category where that's like their job. That's what they do. I would imagine an informed investor would make individual stocks. And usually those investors, by the way, are they just don't like the retirement thing. So they're over here doing their thing. They enjoy this type. The long, like there's a big difference between a day trader and a retirement investor. There are day traders that can't invest for retirement. And it's the example would be putt-putt, right? How many times can you putt a ball 2 feet into a hole? Almost every time you can putt for a short distance. How many times can you putt from 20 feet and make it? If your eye is not trained to see such a long putt, then you probably aren't going to make very many of them. Whereas there are some people, there's even an ESPN show about this, not to go off track, where they putt. The game is putting and there's big money involved. These people have learned how to putt long distances and they get shaky when it's really close because their eye can tell the long distances. It's the same in investing. If you're day trading or even participating in futures markets or options market, for you to then turn around and have a long-term projection based on speed or fundamentals, however you're investing, is very difficult for them. So I just know that from talking to people, but I can certainly understand that. For years and years, all we did was day trading, or I did, was day trading every day. And when it became time to sort of hold things for longer and longer, that was a little different. That's why we do everything based on speed, not my personal opinion. You don't like to check. There are people that don't like to check. If someone is watching for you, then you don't have to, don't check in so much because we're trying to take the emotion out of it. If you just buy something and walk away for a year, okay, that you need to check in. Like figure it out, turn on your phone where you can just flip and look or something real quick. You got to at least check in. But if someone's doing it for you, then that's understandable. You want to be alerted if there's an emergency or something, but you don't need to know every little tick in your retirement account. You do not want to have to go back to employment. Can I realistically generate income with my deferred comp? London, that is a very broad question. Have no idea what's in those accounts, how they're invested. I couldn't answer that one specifically. I wish I could. I just would need more information. If you have 25 years left to be retired, should one be aggressive? Elonia. Should you be aggressive as long as you can sleep at night? I have customers that are very young and I want them to swing for the fences. However, they will be up all night dry heaving into a wicker basket because they don't like the idea. It's not their makeup. They can't do it. So in exchange, I have to educate them to let them know it may mean you have to invest more dollars to make up for lost returns. And some people are okay with that. Some people come around, they get more aggressive, but I do understand it is an emotional game. So as long as you can tolerate it, like me personally, I'm 36, and I am swinging for the absolute fences. I don't care if the markets fall. I hope they fall. And I am swinging as absolutely possibly hard as I can because I'm just not scared of things going wrong. When they do go wrong, I'm just going to keep investing more. So it doesn't bother me, but I look at this every day, so it could be different. Oh, if I had a flight simulator. Actually, that's my summertime goal. I'll put it down on video here. My goal is by the summertime to get back into flying lessons. Did that a long time ago. Love covered calls, Keelan, especially if you are close to retirement. If you are young, I don't like the idea. So how's that for specific? Good. Yeah, we got to keep the basics in line for sure. Yep. The rising tide lifts all ships, but when the tide goes out, you see who's skinny dipping. I like it. Best quote of the day. Okay, we'll be back for the closing beat later. The markets, I didn't miss out on much on Friday, not being here. We're going to carry over that conversation because it looks like the markets are doing the exact same thing they did on Friday. So we'll go ahead and give you the update on that one. At the closing beat, that starts at 5 o'clock Eastern time, which will be here, right here, live on YouTube. Thanks for joining us. We'll see you later.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.
Hey, wait! Before you go go watch one of our other great videos? Have you had a chance to see our new Fin Tips videos? They focus on one topic at a time, covering investing, personal finance, and anything that can quickly help you with your dough. Best of all, we'll keep it real short, because we know time is money.